Hello traders, welcome back to Sniper FX, and it's been an extremely interesting day on the market, so I thought I'd do a quick end of the day market recap. We have taken some trades. I'll show you guys what we've been up to on the team. So very interesting day. As I broke down last night, gold is still bullish based on that daily internal shift of that internal bearish pressure that we had here. So we've shifted into a bullish market dynamic, obviously when gold wiped out that daily lower high over here with 30 pips as it made the last month's highs. So today, very interesting day on the market. I've had a very extremely busy day, been trading, just a 3-hour team call, and I'll show you some of the trades we took. So the first thing I want to break down is this beautiful gold buy that we took today in US session over here. And I also did send this publicly on the Sniper page. So if you're part of this channel, it's a public free channel that we have here. I sent the gold idea over here and I said we're in a beautiful position because we've just grabbed a bunch of liquidity. We are still bullish on structurally, and we've just US Open, London US Cross has just grabbed that London low liquidity, and it's also rated last Friday's NFP high, NFP low liquidity as well. Obviously, the NFP high liquidity got raided last night in Asia. So I'll talk about all of that. So this is what I'm talking about. So that entry was sent over here, and you can see it's ripped absolutely. I won't go into how I refined the trade on the lower time frame. I did that with my guys on the team. However, you can clearly see. So you know, what are we expecting today? That's what you got to ask yourself every time you go into the markets. Are you expecting a bullish day? Are you expecting a bearish day? Now, if you don't know how to answer that question, it's really to do with something that's happening on the higher time frame, and that's structure. So obviously, structurally, we shifted H4 bullish. So today I'm expecting, or we are expecting, bullish continuation of gold. Therefore, gold is open at 11 o'clock, and it's very important that you mark out the open price, which is right there. So when you have a bullish candle or bullish day, how is a bullish candle structurally created? And this is exactly what I went through with the team. So a bullish candle, if you guys will recall, has every candle, no matter what time frame you're on, has 4 very important landmarks: the open, the low, the high, and the close. So the reason why this candle is bullish is because it has closed above the opening price, which is over here. So the open, low, high over here, and close. This is the candle I'm expecting to form on gold today. And just out of curiosity, what's happened? We've actually made the open, the high, the low, and this was a temporary high that they made in Asia, which can happen. Now, this is the actual high of the day being printed, and weak price is going to close somewhere here unless this high gets broken again, which is a possibility, but unlikely, as we are coming to the end of the daily cycle. And I've shown the first trade we took here with the buys, and I sent that public trade idea for free. And look at the trade, and it's already shot up almost, how many pips is this from that entry sent? So that entry was sent right here, around 200 pips or so. So that's a fantastic trade. Then obviously we've got this trade that I took live with the team on the call, and I'll show you guys this. So this is intraday ping pong, and obviously I wasn't awake yesterday at these times to do this, but there's ways you can ping pong this, take the trade to up here, and even take the sell-off in Frankfurt, because you know the low of the day needs to be printed. So very important stuff. So just to show you guys that we are not making this up, I will show you guys a little snippet from today's call. So if we look at that, you guys can clearly see this is the Zoom call today. You can see we're looking at the exact same chart. So if I orientate you guys again, we're back here in price, and I'm refining the POI, and we're taking the trade together. And if you go back on the call, look what we talk about. So
it's coming down. So we
it's going to come down. If you look up things, I'm looking at it here.
Yeah, it's only an external shift, yeah, but be careful because that low is on inducement. So over here, obviously, we're just taking the gold sell over there, but we're talking about US buys also. I haven't looked at the daily cycle for this, but this might be the low of the day again. So and here we go. We've taken another trade too, which is the US 30 buys. I won't go into that. And obviously, we took the sells, and look, it's dropped beautifully. So what's the risk reward on that all the way down here? That is a nice, almost 1-7 reward, which is fantastic. And we secured profits all the way up here. Now people hedge and this, that, and the other. That's a fine, that's tactic you can use. However, if you with probability know what's going to happen to price, you don't have to hedge your trades because you can just read the market intentions. Obviously, we've created a new H4 higher high. We took the sells here on, this is probably the end of the daily cycle over here, and we have started shifted bearish. We have got this external landmark here that we are currently protecting. However, this may get wiped out as this has come into an important thing. However, from the higher time frame, we are still bullish. So it's been a very extremely interesting day in the markets, but I want to break down this section of price action for you guys further, just to give you guys an idea of how you can potentially trade this, take this trade and maybe utilize some of the concepts for yourself. Of course, we are expecting a bullish daily candle on gold because previously we are structurally bullish. And also, I'm expecting a bullish weekly candle on gold as well. I won't go into that just yet, but that is the opening price of the weekly candle and the daily candle. We went on, and guess what? This special structure over here is a Sydney range. A lot of people in the industry do not care for Sydney, or they quote that this time in the market when the day rolls over is dead time. Well, if you actually think about that statement, how can that be dead time? Did the entities that control the market suddenly stop controlling the market in this bit of time from 10 till midnight on FX pairs? I'm talking GMT time, or 11 till midnight in the UK. No, they did not. There are banks in Australia, particularly the people sitting in Sydney, they have a particular job. People think it's dead time because yes, it's a very quiet time in the market because the market's not really fluctuating or moving tremendously. However, it has a very important job, and that job is to do what? Is to create that Sydney range, which again is a pool of liquidity, and that liquidity gets exploited. And if you understand the times, and there are specific times when things happen, if you understand the times when these moves happen, how you put it together, you can exploit that and you can trade the sell off here into the buy off and the sell. You can do that. So it's very important. So last night what we did was we wiped out that NFP high as we opened from Sydney over here. You can see the Sydney high got liquidated. That very important time to create one expansion side of Asia. We pushed down again over here. There's a very important key time over here when the expansion of Asia finishes. And guess what we've done? We've then pushed into the midline. Frankfurt's open. And which side is Frankfurt going to go and take and raid? I won't share that, but it's pretty obvious from what I've discussed that it was going to go and raid the downside because we need to go and print the low of the daily candle. And this is what it's done. Now, this is where the price action becomes tricky and you have to identify your supply and demand zone. So I've identified this area of demand in the market. We've come here. What have we got? So resting here, we got trend line liquidity resting all across here. We've got the NFP low, which happened last Friday, so resting across here. And also as price is coming down, we've got inducement building, as I've discussed on the team call that's publicly shared. You got liquidation. This is the FE component, through it into your demand zone, and then you go into your entry protocol. And that's a beautifully timed trade. So you can see with probability, this is the low of the week also, but definitely this is the low of the day because we have expanded considerably, 200 plus pips to the upside. And that is just a devastation in the market. So obviously I didn't trade Asia last night, but if I had been up trading Asia, there is in my mind, no doubt we would have taken the sells into the Frankfurt, into the buys, and then the sells, and then obviously we're taking the buys. So in the daily cycle, even if I wasn't able to trade Asia, we have taken 1, 2, and now we're taking the potential third move in the daily cycle. So that's all you need to do. You don't need to trade 7 assets in a day to get your potential output in portfolio growth, and that's how it's done. So it's an extremely interesting day in the market. Obviously, they were on the lower time frame. There's protocols being applied. There's concepts here in play. How you pick apart the POI, how you pick apart the higher time frame POI, lower time frame POI, what you're looking for over here with the mitigation and order flow play, and it's and the shifting structure over here, and then we're shifting nicely. So that is a beautiful trade, and I just wanted to break down gold for you guys. obviously is one of my favorite assets. So, you know, we've been doing pretty well on gold recently, and, you know, that's some beautiful trading here. So that's how you can intraday trade. Intraday trade is obviously something beginner traders should not do, because if you do not have an understanding of the daily cycles and the market cycles, then it's very particularly difficult to do. Another reason it's very difficult for beginner traders is because if you don't have your foundational concepts handled and you understand them thoroughly, you're going to be very difficult. So I've been focusing a lot of videos on structure related videos, and obviously if you don't even understand structure, then you cannot go on intraday timeframes and trade intraday, because with intraday you need to know when to close your trades. That's the key. With swing, for example, if you're in the gold buy here, and obviously I haven't held it, I've just been getting into the moves from an intraday perspective. If you've held your gold buys here and you're in swing, you're not worried about these retracements because you're holding the swing for your longer, higher term time frame targets. But intraday, it's very important. For example, if you ended up taking the buy at the end of Asia, to know where you would have closed the sells into Frankfurt and then made the appropriate decisions. And that's the hard part when you start intraday trading. So you have to be cautious with that and careful with that as a beginner trader. So, you know, you have to take baby steps and build up to these things. These are not easy principles and protocols to follow, but I hope you guys found that interesting. That was a very quick breakdown for you guys. And I shared this publicly. I showed you that we took this trade live with a team. I couldn't obviously share it publicly because I'm on a team call with my team. So that's how we do it. And, you know, and I'll show you some of the feedback. So one of my students, look, today was a great session, life-changing once implemented. Exactly, it's life-changing because once you understand how price is being delivered through the algorithm and where the specific turns in the market are, i.e. where the session highs and lows are being printed, because you understand the times when those session highs and lows are being printed, then you can cause some devastation in the market. And obviously, not many people touch Asia. It's not a very common thing because they have not figured out how Sydney meshes into that Tokyo session and how you combine that to find the daily cycle. But people cannot ignore Asia and Sydney. How can you ignore Sydney when that's where the daily candle opens from? Like without Sydney, you do not have any complete candle. You don't even have a complete weekly candle, because again, the four landmarks of any candle are the open, low, high, and close. That open price, where does it happen? It happens at the start of Sydney session. So those people that are talking that Sydney and to Asia are not important, they just simply are not clued up about how the market and the algorithm is really delivering price. So I'm extremely tired today. It's been an extremely long day, and I hope you guys all had a wonderful day. I hope you guys managed your risk, and I'll catch up with you guys very soon on the next call. I'll keep the content coming every day. You know, I can pretty much do this day in and day out because that's what we do. So I'll keep the content coming daily. And I hope you guys are finding these insights useful. Obviously, I can't get more deeper into some of the times, etc. But if you do the work and backtesting yourself, you should be able to figure out. Of course, if you want to figure out Asia, you might need to stay up in Asia and actually trade a few sessions of Asia. So that's all from my side for today. And I hope you guys found that useful, and I'll catch up with you guys very, very soon.